Hi good people, welcome. Today I'm going to be showing you EMA, which is Exponential Moving Average. Now I'm going to give you a bit of a detailed thing of what it is. Also we're going to look over it, and then I'm going to show you a top secret way that we can actually home in on known support and resistance lines using EMA to target our points of when we're going to get a reversal in the market for when we can take a trade which is trending. Okay, now a trending trade is normally if you're in a bull movement or if we're in a bear movement, and I'm going to show you which works on any symbol. It will work on any symbol, it will work on any time frame. Okay, so what we're going to do, first thing we'll do is we're going to take you over to here. Okay, how to set up an EMA on any symbol and time frame. Now I'm going to go over this very shortly with inside a chart, just in case you've never used EMA before. EMA is a very powerful indicator which is available on every single chart. Okay, there's no chart that has not got EMA, okay, which is exponential moving average, because this is where it reacts faster to price changes. Okay, so what we're going to do is we're going to go over this, and hopefully you're going to have something that you're going to come away with and you're going to think, whoa, I didn't know I could do this, right? Or it might be the very thing that is stopping you from missing in a trade. So you might be taking a trade using a EMA, and you might be using the generic numbers that normal people tell you to use, which is like 50 and 200, and then realize that the ways that you're supposed to set up your EMA can make a vast difference depending on what symbol you're using and what chart you're using. Okay, so EMA is a technical indicator that smooths out price data by giving more weight to recent price movements. This is compared to simple moving average, and EMA reacts faster to price changes, making it ideal for trading XAUUSD, XAGUSD and EURUSD. XAU is gold, XAG is silver, okay, and any other Forex pair or symbol. Now you can use this on Bitcoin, you can use this on indices, commodities, you can use this on stocks. Okay, so you can use this on absolutely anything you like, okay, because there is always going to be the telltale sign of EMA. Why we use EMA in Darren's Trading Academy at DTA, which is Darren's Trading Academy, the EMA is part of nearly every manual and automated system we teach. Here's why. Now I also teach you known support and resistance lines, okay, and I will just go over this very quickly. Now XAUUSD at the moment is closed, but you will note that this is respected lines that I use every single time I get into a trade, okay, and I'd only do buy trades when I trade gold, and you'll see that these are known support lines, all right, where I've been in the trade and out of the trade. And if we jump over to my remote desktop, and I will show you, okay, my Darwinix account, which started with £100,000, and how this growth is taken upon itself, and also how you can safely keep with inside a trade which you don't necessarily have to worry about losing. Okay, now you can see that these are a few things which I'm running, okay, so let's not worry too much about that. The idea of this very video is going to give you information which hopefully is going to help you in how to place a trade safely. Okay, so we just see that the computer slowed down as it always does. Okay, so we just got to allow this to sort itself out. It's almost like a 10-second delay, right? And then it just keeps doing it. Right, so you can see this is my account 2 at the moment, which is 179,233, and you can see that my equity is 179,173 as well. This is my MT5 account 2. I want to take you over to MT5 account 1. And this one is my money maker, if you like. This is the one which is this one here. Okay, this is my XAUUSD chart. This is what I use. I use other indicators which will show you exactly how to do this and to home in and to be very profitable using special safe ways that you can trade online. Okay, without using prop firms, and I will teach you and show you how to do all that. It's all about using the Darwin account. I even do a Darwin done for you for people that can't run them in their own country, and I basically do them for you, and you know, there's lots and lots of ways to do this. So you can see that my balance after £100,000, remember this started with £100,000, is 804,831. My equity is 769,983. Okay, now this is a simulated account. What this means is that when I do any trading, I create my own Darwinix index, which is a trading formulation which other people can see and use to profit with inside their own margins. Okay, and this is how you get paid. You get performance fees when people want to try out your index. Okay, this is how it works. It's where you get an allocation. You might get 30k allocation, you might get an actual 45k, 70k, 180 or 175,000 allocation. Okay, and then what you do is you skim profit off that, which you're given as a watermark of actual profit, which comes in a euro. Okay, you normally get paid in the euro, and it gets transferred directly into your bank, normally between 2 and 24 hours. Okay, it normally takes 3 to 6 months to get to this point of when you start to make money, and it gives the risk factor is as little as $38 a month. Okay, and I show you after the 6 months how we run the system completely on its own. Okay, and then it doesn't cost you any money at all. And then what you do is, where you were used to paying this $38 a month for the account 1, and it's now running fully automatic, we move over to account 2. Okay, so I just wanted to just keep you up to specs so we know what we're doing with that side of it. Okay, so what we're going to do is we're going to jump back over to this chart here. Okay, and I'm going to show you how we can start to use EMA, which is extra moving average, how we're going to set it up, and how we're going to use secret information for working out what EMA numbers we need to address to put it into the chart. Okay, because every single symbol you're going to use is going to have a different EMA. If you're sticking to a generic EMA of say 250, it's no wonder that you're going to have issues of when you're trading, because the market is going to move in different ways, i.e. for XAUUSD and CHF-USD. Okay, and we're going to use, for this example, I'm going to use a smaller time frame. Okay, so let's use Euro CHF. Okay, so we're just going to drag this across. If it allows me to, let's do that again. And see if that's going to open up. Here we go. And what we're just going to close this down here, and then we're going to open this up. Okay, now the idea is that we want to fill out and use our EMA, which is our extra moving EMA, extra moving exponential. Okay, now I've already explained to you what that is. If we go over here, wrong one, if we go over here, click on here, and you'll see that I've already explained to you what it is. But why do we use EMA? Okay, now the reason why we use this, okay, is trend confirmation. This helps to identify if the market is trending or it's in range. Entry filtering, this is when we can use EMA to avoid trading against the trade. Dynamic stop loss, this is where we can use the second EMA as our stop loss. Okay, and what you normally do is, if you have a buy trade, you would have your second EMA as a stop loss, but you just go slightly higher. And if you have a sell trade, you would use your stop loss and you would go a little bit lower. Okay, now the idea of this is that if the market already respects that line and it bounces off that line and then goes back down, it's not going to stop out your loss. Okay, so you're not going to lose your trade. Okay, because that's the end of the day, that's what you want to do. And if you see inside my Darren's Trading Academy, I'll show you how we can create a loss adjuster using the stop loss, which will keep you into profit, and that really works very, very well as well. So the institutional edge, this is smart money concept, often respects EMAs on higher time frames. Now this is normally when you can get a candle which is out of range, I'll explain to you, I will be doing a video very shortly on smart money concept. Okay, at the moment we won't get into that too much. So how do we set up an EMA for any symbol and time frame that works on MT4, MT5, in fact any trading view chart? Okay, open your chart for a symbol, e.g. you can use XAUUSD, GBP, JPY, EURUSD, you can use practically anything you want. Okay, now you select your preferred time. We can go 5 minute, 50 minute, 30 minute, 1 hour, 4 hour, daily, weekly, monthly. Okay, you can go wherever you want it, right? It's not really a problem. So MT4 and MT5. Now all I've done is I've given you a little bit of a demonstration which is inside my Google Doc. Okay, if you want this Google Doc, all you've got to do is ask me and I'll send it to you. And it basically will explain to you in scalping what EMA to use, intraday swing trading what EA to use, okay, EMA to use, and trend confirmation what EMA to use. But there is a secret sauce that if you add this is going to give you precision points of when you can get into the market and precision points when we can get out of the market. And this is what I'm going to explain to you the best I can, okay, which we're going to do right now. Right, so we go over here. Let's come. I'll tell you what. Let's just use another server because that one's just a bit slow. So let's go over here. Let's use this one. Okay, this is my crypto account. Okay, but it doesn't matter. I can still do exactly the same thing which I'm showing you because the idea is just to home in on the EMAs and to see where the exponential moving average bounces off points of interest. Now what this means is this is the bottom of the candle where we find the actual resistance for the particular symbol that we're using. Okay, right, so for the argument's sake let's use XAUUSD. Okay, so we're just going to scroll this up here like so. Now it's always the same when I'm doing videos, this goes very slow. Okay, but just bear with me and I will try and show you the best I can of how we can set up the exponent moving average. Now we're using an MT5 Darwin account. Okay, remember you can use any account you like. If you've got your own broker, there's no reason why you can't do this on your own broker as well. As always, I always have a disclaimer, I'm not a financial advisor. What you do is at your own due diligence and it's at your own risk. What I'm showing you is just tools that you can use which may improve your actual trading ability. Okay, so we're going to work on an hour, 1 hour. Let's move to a 4 hour time frame. And what we're going to do is we are going to put some EMAs into place and we're going to see whereabouts these EMAs fall inside this chart. Okay, so what we do is if we go to tools, this is going to open up a tab and then we're going to, that's not that one, let's go to insert. It's going to open up a tab. Very slow. This is one of those things like the Kit Kat, you know. Right, here we go. So we've got indicators here. Okay, so we're going to open this. We're going to go over to, you see, you could set this up if you wanted to with a triple moving average where you just click on one link and then we just adjust the things accordingly. I'm going to be doing it independently because it's going to give you an idea of how we're going to use the indicator, which is going to help precision make where we need to get into the market and out of the market. Okay, so this is what we're going to do once I can actually get this to work properly. Right, so let's just open this up, slide across. I'm going to use trend. And what we're going to do is we're looking for EMA. Okay, so this is what we want to find. So if we go to custom, now remember, you're not going to have the same problem I've got. This is just every time I film, because I've got very low bandwidth, it slows the whole process of what I'm trying to show you. Okay, and all we're looking for basically is we're looking for EMA, which is exponential moving average. So if we go to volumes, it's probably the best way to do it. And in some cases, you can actually download your EMA. Now, I will have inside my Darren's Trading Academy lots and lots of factors that we can use, which will show you how to home in on your EMA. So just because I can't get this to independently open up one EMA, okay, which is hilarious in some respects, what I'm going to do is I'm going to show you the triple exponential moving average, okay, and then all of this is just going to give me different charts that I'm going to be using. Okay, so the first thing you're going to do is you're going to set your period. Okay, now the period is almost how many times this is the number which we are concentrating on. Okay, so if the price breaks, if, say for instance, if we change this to a 50, okay, hang on, it's getting a bit diabolical where it's a bit slow. Right, okay, right, so let's do this. Right, so we want this at 50, and we're going to add this. We're going to run our perimeter on 14 at the moment, okay, and then we're going to click OK. And what this should do is this should draw a line of chart. Okay, now if we look at our line of chart, this is basically a 50 line. Okay, so this is a 50 line. Now if we do our 200, you normally use the 200 EMA, exponential moving average, to work out where your trend is. Okay, so if we take out another click, right mouse click, if we go to indicator list, let's do that again. Let's go here, indicator, let's try oscillator, right, trend. I'm going to show you a trick. Trend, and we're going to go to moving average, and then what we're going to do is we're going to click on method, and we're going to click on exponential, okay, and then we are going to change this to 200, and we're going to change the color to yellow. And we're going to click OK. And we're looking at the range in a 4-hour window of where Sol, which is a crypto, okay, is moving. Now, if you look at the actual screen, you will see that this is falling, okay, it's falling. So there's a good indication that this particular trade, okay, is in a bear movement at the moment. I'm just going to take this line out because it's confusing everything, so we're just going to delete this indicator, and then what we're going to do is we're going to get another moving average. Now the computer's sped up a little bit, the mouse is running in the wheel and powering the electrics for my computer. So we're going to go to indicators, we're going to go to trend, and we're going to go to moving average. Okay, and we're now going to change colour, and we're going to go to green this time, and we're going to change this to 50. Now what you need to do, okay, is this can be a bit time consuming. However, once you work out what symbol you're trading with, and when we get to points of support and resistance lines that correspond with the EMA that we're using, this is going to be a very important tool. Okay, so if we go to the daily window, and this is how we can home in and precision use the actual setup of this. Okay, so we'll see at the moment that this line here at the moment isn't corresponding with this line here. So if we go to 4-hour window, if we go to a 1-hour window, okay, so we're a 1-hour window, and you'll see that this is starting to give us a little bit of a representation of we could use the 50. Now if we get another line, okay, and say we use 35, okay, so we're going to go to trend, we're going to go to moving average, we're going to change the color again. Let's use purple for this one, okay, and we're going to do 30, let's do 34 for argument's sake, right? Click OK, and you'll slowly start to see in a minute of what we are aiming to do. Now you'll note that there's most of the candles are on this line, okay? It's respected this point here, it's respected this point here, it's respected this point here, right? So this 34 could correspond to this actual symbol, okay? Because it's showing you points of where it starts, especially this one here. Look where this line has actually worked out really nicely on this, okay? So if we get rid of the 50, we right mouse click this, I might be able to adjust this line, which is the 50 moving average, and we might want to try 60, okay? And this is what you do, is you literally play around with the numbers up or down to see where they correspond on the candles, okay? So the green line now is still penetrating through here. It is respecting this point, okay? It's respecting this line here. So if we take the line back, we go back that way, you can see that the 34 is working really well. This seems to be working quite good, and you can see that these lines are starting now to work, okay? You can see that this line here, for instance, okay, so if we just bring this in a bit, and you'll see that these lines now are starting. See, look, we've bounced off here, so it's gone up, it's penetrated through here, so we need another line, right? We need 3 lines, okay? So we've got our 200, so let's adjust that, say to, let's adjust the 200 line, so take 250, okay? And what I would do is I would go up in increments of 25, and this will give you an idea. So you could start with 5200, you could have your first line where you could start at 14, and then 28 and 56 and 64, and start to build those lines up until you find a point of where it's starting to respect known supports and resistance lines within inside the actual trading that you're looking at. Now we can see that the 200 isn't really, I mean, it is respecting this line here, it's respecting this line here, right? So let's take this back. And basically this is how we position the actual EMA to work with inside the trades, okay? And you can see that we're working off these lines, these support lines. So you've got this support line here, it's bounced off this line here, it's bounced off this line here, it's bouncing off these lines here, right? It's bouncing off this line here, it's bouncing off here. So 250 is pretty close, it's pretty close. Let's try 300. So right mouse click the actual chart, or say 275, okay? Let's do 275. Now click OK. We're going to get a slight movement in the yellow line, which could be on a delay, so this could take a few seconds for you to actually see it before it does it. Here we go, it's going to start bringing the line up in a minute, and we can see that we're homing in again. Okay, now you can see that this is bouncing off this line here, it's bouncing off this line here, it's bounced off this line here, right? this looks like these could be known support and resistance lines. Why don't we try 300? Okay, let's click on here again. Let's try 300. Now we're going to click OK. And this is basically what we want to do, is we want to find points of when it's gone into the market, out of the market, and we are really homing in our line. Okay, so we can see that this is here. We can see what I want is I want this line to be on this one here. I want it to be here. I want it to be here, right? So again, what you do is you click right mouse click. Let's try that again. Right mouse click, properties. Right, let's try 400. And remember, this is crypto. Crypto is very volatile, right? It moves in different days. So, you know, this could be where we just need to open up our actual time frame or our actual period, so we can home in on our actual point of when it's going into the market and when it's going out of the market. So it's going to disappear and come back again quite more than likely. Okay, so we just got to give it a few seconds. Now it's started to look a little bit more better. This is more like it, because if we look at the line now, this line is respecting and it's gone up. It's respecting here, it's gone up. It's respecting here and it's gone up. Okay, it's respected this point here. This is a pullback and then it's come down. Okay, it's come off here. This line's a bit out, but again, this can be rectified by changing our line, so this can be our EMA on this line here. Okay, so let's click on this line here, which is this one here. Okay, and we're going to click on properties, and we're going to adjust this to 120. And we're going to click OK. And we're going to see where the green line goes. Okay. And then we're going to see how it respects itself on the candles. Okay, so you can see now that the lines bounce off this point here and come down. Okay. Bounce off here, come down. Bounce off here. So you can see that this is starting to play a picture. Okay. Where we're actually starting to see how we can use the exponential moving average to get into a trade and out of a trade. Okay, now we can work on a 15-minute window. We move to a 15-minute window. Now we've honed in on our EMA. Okay, now there's one more we need to do, which is basically the mauve one. Okay, which is, I think, is running quite low anyway. And you'll see that all of a sudden we have a really good line here. Okay, you can also see that this line here, in fact I'll probably leave this line because it seems to follow where the candles are going. All right, and then so what have we got? What have we got at the moment? Okay, well, we've got our mauve line, which is running at 34. We've got our green line, which is 120, and we've got our gold line is at 400. Now remember, we are normally programmed to do 50 moving average, 200 moving average, right? But look how we've synchronized the actual EMAs to be able to get and use to get into the market and out of the market in a scalping point, right? So we go to 5-minute window, and what we do, what are we going to get now? Well, now you can see that this is a very powerful line here, right? This is a fantastic way to get into a sell trade. Okay, this one again is another one, sell trade. Now you could do a sell trade here and use your top line, which is this one here, as your stop loss. So you could do sell and then have your stop loss at this line here, okay, or just above it. So you could get into a trade with this and then get out of a trade if it's gone the other way. Okay, but look how much profit you would have made. You made an exponential amount of money just with this trade alone. Now this works very, very well if you're trying to pass prop firms, okay, because you're mechanically using a way to use EMAs, which is an exponential moving average, and you're finding points of profit zones that you can actually start to make money online, right, using your trading ability, but also you're homing in of points of interest and points of the trade where you can get into the market and out of the market. All right, so if we close this one down now, if we move over to another trade, all right, so let's say let's go back, let's go to here. Okay, let's use this one for argument's sake. Okay, so let's use this one here, right? Now I know I've got ADX running on this, but don't worry too much about this. Okay, this is more of an advanced thing which I'm going to be showing you. These are all available inside my trading academy. I've got hundreds and hundreds of indicators, and I've got over 69, it's actually 70 expert advisors that I show you how to make money online with safely, which you can actually get your hands onto if you want to. Now all we're doing while we're on this line here is because we want to use indicators, and I want to show you the difference between Sol, which was a Bitcoin, and now we're going to be using a completely different setup. Okay, so if we go to indicator, it's MA I'm looking for, trend, here we go, and then moving average, and I'm going to show you, let's put 200 up, okay, and we'll leave this pink for now. Okay, and then we're going to have another one, and what we're going to do is we're going to play around with these in a minute, all right, because you're learning a secret that other traders aren't always going to tell you, okay, because they ain't going to let you know the actual bread and butter lines, okay, which are going to give you profitable points where you can get into the market safely. Not everyone's going to be showing you this. So if we use the generic 250 to start with, okay, I've just got to change that because that's, let's go back here, that's the moving average, 50, let's just change this one, properties. Now I'm just going to change the color, okay, it's only so we can work out which one's 200 and what one was 50 to start with, okay. We're working on a 15-minute time window, so let's move this to 30 minutes. Okay, and you'll see that pretty much the 200 does respect points of interest into this market, okay. However, if you move it to a 15-minute window, all of a sudden your actual thing now is off, right? It does respect this point here, okay, but it's not really giving us points of when we can get into the market and when we can get out of the market, okay. So let's start again. So let's change this, say, to 22, right? So this line here, which is the purple one, click on here, and let's change this to, say, 20, and click OK. Now remember, we're using this with GBP USD, and if you note now, okay, like magic, we are now got this line is almost marrying up with the actual candles, okay. You can see it literally is hugging this line here. It's showing us points of when this is in the market, it's showing us points of where this is in a sell trade, showing us the set points when it's in a buy trade, showing us points again when it's in a sell trade. It's touched this supported line and then it's come back down again, right? So this line I would suggest you hold on to for a 15-minute window in GBP USD. So what we need to do now is we need to find another point, okay, where it's going to bounce on the outer line. This is this line here, and this line here, right? So let's try this at, say, 90 and click OK. and see if we get any change in the direction of what we're looking at. Okay, so we'll see that we're running this on a 90, and you can see that it's really just not giving us what we require. Okay, so let's take this back again. Let's go back again. Let's try 70. And we should see that it will move again. So this is at 70. Okay, and you see that it is bouncing off this point here. Okay, so we've got this line here, and we've now got this line here. It's bouncing off this line here, it's bouncing off this line here. So we could, if we want to, use this line, okay, because it is respecting points inside the market. Okay, it's bouncing off this line here as well, right? It's bouncing off this line here. Okay, so this is giving us a little bit of confirmation that our second EMA we could use to determine whether we're going to take a buy trade or a sell trade. So let's get another. We go over here, insert, I think the rabble will just come back, so you might hear them in a minute. I may have to go and open the door. Back to indicators. We're going to move to trend. We're going to move to moving average. And what we're going to do is we're going to put this at 140. Okay, now this is double. Okay, so click OK. Okay, and I need to make sure I change that line to a different color. So we're going to use purple again, just so all this one here, so it stands out. Pink, if you like. And where does this line show you? Right. Well, it's not bouncing off a lot of things at the moment. So can we use this line? Probably not. Okay. Okay, so let's change the purple line again. And what we're going to do is we're going to keep doubling it, all right, until we get a point of where we can use it. So let's try 280. And click OK. And you can see that there is points now where it is starting to respect points here. Okay, so it's bounced off here, it's coming up. It's bounced off here, it's bounced off here. It's bounced definitely off this line here and come down, right? But it's not really giving us the indication of what we need, because don't forget we want to use our second EMA as our stop loss when we get into a trade. Well, if we look for a 5-minute window, it gives you a different story entirely. Okay, and this is what I'm saying. You can see that it is respecting this line here, is definitely respecting these points here where we can get into the market. Okay, this is a respected line, so we can work with this. Okay, personally I think the purple one is out of range, so let's just bring that back a bit. Let's put this at 175. Click OK. And you can see that this is giving us, if you like, trend movement. It's giving us a little bit of a scope of what is going on. Now what I would probably do is, if you can't find that particular line, I would preset it at 200. Because it's a known line, okay, which most people will use. Because we've already got our custom lines that are in place for us to be able to get into a trade and out of a trade. Okay, this one works really, really well here. This one's working exceptionally well here. It's respecting these points, respecting it, respecting it, respecting it, respecting it, respecting it. It's even coming off here as well, right? So this is working really, really well. And we know that this line is 20. This line we've got is 70. I would be inclined to adjust that line to 40. And I would be inclined to even adjust this line here to 60. That's what I would do. And I think that is a better way of doing it, because what you're doing now is you're seeing, look, where these three lines are coming down, it's showing you that this is bear movement. Where these three lines are going up, showing you this is bull movement. And it gives you points where you can get into the market and out of the market. Now, what I'm going to be doing is I'm going to be showing you how we can join other indicators which are going to make this more powerful, okay? And what we're going to do is we're going to use MACD, but we're only going to use the histogram. We're going to use CCI, okay, which is basically smart concept money, if you like, which we're going to be talking about. And then we're going to use trend is your friend. Now, I've showed you basically using trend is very, very easy to maintain and find by simply using 200 MA, okay? And if you were trading certain stocks, if you indices, crypto, you could get away with using 250. And what you normally have is you have a generic way of doing it, where if your candles are above the 50 moving average, it's in the bull market. If the candles are below the 50 moving average, you're normally in the sell market. And then you use the 200 EMA, okay, which is your moving average, as confirmation of whether you're in a bull market or if you're in a bear market, okay? So this hopefully is going to help you a little bit. We're just going to go back to the chart, okay? So there's a couple of examples here, okay? So the example EMA strategy in action. If the price is above EMA 21 and 50, look for buys. If the price breaks below EMA 21 and 50, consider short or watch for reversal. Okay, now remember, you're working this is an EMA that's already been worked out with an XAUUSD on a 30-minute window. Okay, so all I'm doing is giving you already proven EMA points of when you can actually use this as a breakout. Okay, and this is where you can have a def cross. Okay. Again, if you want to know what all that is all about, I can teach you all that, which is inside my Darren's Trading Academy. Is when you get price retests on the EMA extra moving average after a breakout, that's potential re-entry zone. EMA is a stop loss tool. This is where we teach students to use EMA as a dynamic stop loss instead of using fixed pip based stop losses, which can normally lose money through that process. Okay. When EMA is a floating protective zone. For a buy trade, if price closes below the EMA, it's considered exiting. For a sell trade, if price closes above the EMA, this could signal reversal. This lets you trade breathe during normal pullbacks but still protect your equity. And I've got lots and lots of other trades that we're going to combine together. Okay, it's even showing you where we can use the RSI 28 support and resistance, which you can use as divergence volume for better confluence. Don't trade directly into an EMA unless the price breaks or shows reversal candles, okay? And you can do this very, very simply by using different indicators inside your chart, which look out for, and I will actually bring out combined videos showing you how to use these indicators. So the bonus EMA alert system with Darren's custom indicators, you can set alerts. Price touches the EMA, price crosses above or below the EMA, and one EMA crosses another EMA, say i.e. okay, EMA 21 crossing EMA 50. This keeps you a step ahead even when you're away from your screen. Okay, now there's a couple of things here I'm just going to show you just quickly. This is a cheat sheet. I'm not going to go through the whole of this because it will be unfair for the people that inside Darren's Trading Academy because they get all this. But there's lots and lots of stuff inside there. It goes on and on and on. Okay, but what we will show is I will show you the EMA cheat sheet, just a little teaser if you like. So if you're going to be scalping, you want an EMA of 9 using an EMA of 21. Intraday, which is swing, which is EMA 21 and EMA 50, and swing trading, which is EMA 50 and EMA 200, which is a generic way that most people will use exponential moving average. Now hopefully you can take away now what I've been talking to you about. Hopefully this is going to give you some information of how you will be able to start using EMA confidently, and also giving you a confidence that you can get into a trade and out of a trade, okay? Especially if you're using prop firms, okay? Because all you've got to do is, with a prop firm, is make sure that you have a buy-in entry, make sure you have a stop loss, and make sure you have a take profit, okay? Just make sure that you do it with inside the perimeters that are asked of you when you're using prop firms. Prop firms is a scary concept. A lot of people think, oh, I don't want to use a prop firm. But you can make money with prop firms, right? You just got to know how to make sure that you use the money that you're making with inside the prop firm. Your key thing, okay, is if you pay $39 for a 5k prop firm, you want to get your $39 back, okay? So what you want to do is you want to make sure that if you brought a prop firm for $39, your thing which you need to focus on is getting the $39 back. Once you get $39 back, you need to put that into another account or get another prop firm. So once one prop firm packs up, you've already got another prop firm that you can start working from. And don't forget, there is nothing stopping you that once you've worked out what the EMAs are in the free zones, okay, you could actually set these up, or even build a expert advisor, okay, which will do this fully automatically for you, so you don't even need to be in front of a computer. That's it. All the very best till my next video. Thank you.